All right, we are here again with Angela Keith with Stern Home Loans, and we are talking self-employed and what you need to know about getting a home loan when you are self-employed.
All right, so it's changed a little bit since we've been in this glorious COVID. One of the things that is going to be a little different now is we're going to want an updated P&L, typically right close to when we're getting ready to draw docs, or to make sure that you're still receiving income as a self-employed borrower. Some have that overlay, some don't, but the updated P&L is more consistent. I'm seeing with other lenders needing that. So a P&L is your profit and loss. A lot of small businesses don't actually use one. So I've come into a lot of problems where when I'm telling my clients that we need to have a P&L, they look at me with the deer in the headlight looks and don't know what that is. There's a lot of templates online. If you have a CPA, they can do one that is an audited CPL or P&L, and it's more expensive to do that. So a lot of people opt to do their own.
But we should have them handy right now, though, for all the loans that small businesses have been able to apply for. We've had to fill those out. So
yes. So hopefully you already have them on hand, which is good. But and the need for them now is to show that you're still receiving income and that you've adapted your business to work with the great new environment that we're in right now. So the way income is calculated on self-employed is usually the stickler where it is a lot of self-employed borrowers will say, but I grossed $80,000 last year in my business. Yes, but you also wrote off $60,000 worth of items to write off. So we have to go off of a different calculation. The calculation that we use does allow us to put in your depreciation and depletion back into your figures. And I notice a lot of smaller businesses do not take advantage of that. Obviously, I'm not a CPA, nor do I pretend to play one on TV. A CPA is going to tell you whether or not that's a good idea for you. But I will tell you that when it comes to the loan, that's going to be one that helps us add back into your income to tell you what you make. I've done one just as a quick little look-see to see why you might think that your tax returns are fantastic and you can see the income and the gross sales that you had. However, if you write off a lot, this is what we end up using for your income, which can be thousands of dollars less a month versus what you are actually taking from the business to help pay yourself. There's different ways. If you don't 1099, if you don't W-2 yourself, if you're just a straight Schedule C, this is typically where we find a lot of problems on people's income, is the way they file their tax returns as to how much we can use. If we're doing Fannie Mae, which is one of the industry leaders that tells us how to underwrite these loans, we don't just make them up. They tell us what we're supposed to do. And they have a form that we use. It's a 1084, I believe is the form's called. Not that that means anything. That's just nerd talk. But that form is something that we fill out with your tax returns to get your income. Now, there's a benefit. If you've been self-employed for more than 5 years, typically we only need your most recent tax returns, and we don't have to average it out over the last 2 years. However, if you've only been self-employed for less than 5 years, we need your last 2 tax returns to average out what your income is. So if you had a horrible 2018, but your 2019 was fantastic, we're having to take an average. However, if you've been, a hairdresser for 20 years, I only need your most recent tax returns, and that will kind of give us an indication that you have forward momentum on your income. So we'll see if we can get this to screen share.
Sure.
We were playing with this. So these are, I removed all of the pertinent information to the client so that their information is not here. But these are actual tax returns for a self-employed borrower that I want to show you what it looks like in real time when we do the calculations. So hopefully this shows up pretty well. This would just be where my mouse is kind of highlighting. It shows this is just the Schedule C business income. So it shows, and it's great on line 1, it shows that they made $67,000 for gross receipts. However, when you get down to the actual amount that they did for net profit, line 31, they only claimed $7,000 $450 for their income. Now, I'm not just taking that figure and dividing it by 12 because this person has been self-employed for more than 5 years. There are things that you can add back in according to this form. And this is the form where hopefully it's showing up. This is just a snippet from the self-employed analysis that Fannie Mae has out there. It's this section for Schedule C that we can add back in to figure out what your income is going to be, what we can add in, what we have to subtract out. So non-deductible travel, meals, expenses, we actually have to subtract from your income and it lowers it. So a lot of people write excessive amount of meal and taxes. Again, not telling you to do your taxes any different, just opening your eyes as to how we look at it in the mortgage industry.
Right.
So I've done the calculation for that particular client. So remember up top, they made gross sales of $67,000. However, they had their net profit only be $7,450. So the only thing I was able to actually add back in was $325 for their meals and entertainment. And I actually had to, I had to subtract $325 for their meals and entertainment because it was not part that we could add back in. So it dropped their net profit to 7,125. So we divide that by 12 because we don't need to do an average. And I can only use $594 a month for their income. So that's where you can see very quickly how, well, yeah, I made $67,000 last year. No, the business did, but you wrote off. Now, had we been able to add back depletion and depreciation, line 12 and 13, and I'll go right back up to the tax returns, line 12 and 13, if you actually take advantage of this, again, reasons why some companies may and some may not. Smaller businesses have different reasons for maybe not taking it. But using this, we could have added that back in. And if they had done a $12,000 or $13,000, we could add that back in. That can make a difference. So that's kind of the important thing to see. We also will take your current P&L and add that to it to also make a determining factor of your income currently with new COVID rules. So,
yeah. So it sounds like you really need to talk to your CPA if you're thinking about buying a home in the next year or two, so that you can plan. Yes, when you have these write-offs, you are paying less tax because you had less countable income, but it also is going to lower your chance. I mean, because when you make $500 a month, you're not going to qualify for any type of home loan.
No.
So you just want to work with your CPA on how to make it work to best benefit you and get you to be able to purchase a house.
To purchase it and see. And then this is, there's a whole nother section when it comes to, farming income, when it comes to Schedule E, when it comes to K1s. That's a whole nother story and a whole nother way to figure your income. Yeah. K1 incomes we have to do differently as well. So it's really important to see that, yeah, it's great. Maybe you paid $5,000 less in taxes, but now you're not going to qualify for something unless you go to those ugly stated or bank statement loans, which have higher interest rates and are going to cost you more than you would pay typically on your taxes that you would save. So you kind of have to weigh the options. Do I want to take advantage of all those tax write-offs and have a lower income? Or is there a way that it makes more sense to pay a tiny bit more now, make sure my credit gets improved until I file my next tax returns? And a lot of ways I suggest that self-employed borrowers talk to a loan officer, have them kind of see where they are. We'll make a game plan. I have a couple clients where it makes more sense for them to take the next 6 months, build their credit up as high as we can get it, file their tax returns a little differently, pay a little bit more in taxes, but give us more income to actually get what they want.
Right.
So it's a long-term game. It's not just instant gratification. That's what I don't want to do, is I don't want to put an instant gratification into a home that, now granted, we can do a fantastic and get you into a house now, but if we're doing bank statement loans where we're taking your bank statements for the last 12, 24 months and averaging out the deposits, it's a higher risk loan. So you're going to be a higher interest rate. You're not going to get as fantastic of an interest rate if you're doing those programs because they are higher risk. So there has to be, everything has a cost.
Yeah.
So it's something to kind of mull over when you're looking at that.
Yeah, definitely. Okay. So working with you, Miss Lender, and definitely, you know, with your CPA. And now the tax deadline got extended, so it would be a great time to really, if you haven't done your taxes yet, to really look at your options and how that is going to affect you if you are looking to purchase a home in the next year or two. Because if this year is year one, or you didn't file where it's going to help you last year, I mean, you need 2 full years of decent income if you're looking to get a home loan.
Yeah. It's just always a good get a second set of eyes. I mean,
Yeah.
Obviously with my clients, I'm never telling you how to file your tax returns. I'm just letting you know with how they're set up, this is what we could use.
Right.
And that's all I do is I'll just tell you, this is exactly what we'd use. You and the CPA need to figure out how you want to file them.
Yeah.
Because I really don't want a lawsuit. I'm just going to say I'm not a tax accountant. I don't want to do it. I'll just tell you what we look at in the industry. Yeah. And each program's a little different, but when you're doing most standard Fannie Mae programs, that's the program and the worksheet that we'll use, which is available online. And if you want to get a copy of that worksheet, go ahead and private message me and I'll send you the link to get that little worksheet, and you can fill out and keep playing with it and see where you're coming at. And then you'll know a really solid idea of where your income is before you apply.
Yeah, that's great.
It's a great, and there's also instructions too. There's great instructions that Fannie and Freddie Mac put out to go along with these guidelines. So I can send you the link so that you can use them and look at them. Now, granted, everything changes all the time, so there may be updates. So always double check. Don't think that once you fill it out means, haha, lender, I've got it all figured out and you have to use this, because each lender is going to have an overlay, but it's going to give you one heck of a better idea than to go in blind saying, no, I make $67,000 a year. And then having the uncomfortable conversation, because it doesn't make logical sense. You're like, but no, I make this. And
yeah,
that's where they're looking at it.
Yeah. Really, you don't.
yeah, on paper. I mean, just like, my investment portfolio looks great, but it's not exactly what I'm worth unless I sell those properties.
Right.
So, I mean, I look amazing on paper, but then, unless I sell it, I really don't have that money.
Yeah.
So it's all pretend money when it comes to that. Unlike our 401ks right now. But yeah, that would be pretty simple. And again, just reach out, because each lender is going to have a little different update. So, when it comes to self-employed, but if we're looking at going strictly through guidelines that are put there from Fannie and Freddie, it's simplistic. It's really laid out. It's very easy.
Yeah.
And there's not much to it. It's just, this is the one hiccup that we see a lot of. And then we always pull your business license. So please make sure your business license is current. Had that happen before where they just forgot to renew it. It was within the same month. So we don't want any lapses in your business license being renewed. But we will do that. Some companies are right before closing. They want to see actual receipts so that they can see that, if you were a retail store and you were not able to be opened during all of this COVID, and you had to lay off all your staff, and are you still bringing in income? How are you doing it? What did you do to adapt? So we do get a little bit more in depth for some programs where we have to know, you used to have a store, a clothing store, and now it's closed. So how did you adapt? Okay, you went to online sales. What are your receipts during the online sales so that we can see that it's not been a significant drop?
Right.
So, which makes sense. The investors are trying to protect their pocketbook because they're lending hundreds of thousands of dollars. They want to make sure that it's a solid loan to somebody.
Right.
Which is where all of the COVID updates came from, is because they're wanting to be more conservative so that there's less forbearance that will happen because of the uncertainty at the time.
Right.
But there's still plenty of programs out there and plenty of ways to make a loan work. We just might need to wait a month or two to make sure everything aligns up perfectly.
Right. Yeah, especially if you had a month where you were making the adjustment and not having income as a business owner. Now you're back, figured it out and found new ways to generate income.
Yep.
So wait for that to, get back to a regular. It's just like, regular home loans where they're doing extra verifications of your income to make sure you still have you know, your income.
It's exactly like that. It's the same thing. It's not, I don't want it to sound like there's discrimination that goes on a small, on an employed borrower. It's just making sure that everything is still going forward with the way the environment is. They've just been a little bit more careful.
Yeah. Yep. And that, yeah, it is the time that we're in right now. So yeah. All right. So I will make sure and put Angela's Facebook page link below. So feel free to reach out to her, PM her for any questions, any help, or if you want that form that she was mentioning before to help your calculations. And we will see you next Friday. It's the 4th of July. I'm not sure if we will meet next Friday, but we will be jumping back in after that for sure for our usual Fridays. I know we talked about doing a forbearance.
Let us know what you guys want to learn about. What is a topic that you guys find?
Absolutely. We want to know.
So a forbearance update. Tell me what you guys want to learn. What do you want to know about? If you want to learn more about student loans, do you want to know more specifically about VA loans? Do you want to know specifically about USDA loans?
Yeah.
What specifics are you intrigued about? Tell us, and we'll cover that.
We're doing these videos for you people watching, not for ourselves. So let us know what you want to know, and if you want to post in the comments here, or if you want to message myself or Angela and let us know what topics you have questions on, we would be happy to cover that.
We want to cover, because we want to do what you guys want to learn.
Absolutely.
Tell us.
Absolutely. All right. I'm Jessica Hines with eXp Realty, here with my lender specialist, Angela Keith. And like I said, I'll make sure and post her information for you all.
Sounds good. Bye.
All right. See you later.